Then let's focus in on ICICI Securities, talk a little bit about their plans to diversify into non-broking business, the Q2 consol earnings, as well as the growth outlook with Vijay Chandok, who's the Managing Director and CEO. Thank you so much for taking time out, and I'd like to start off by wishing you and your team a very happy Diwali. To begin with, we are seeing a consistent increase in the derivative income in the last 5 quarters. This is despite market volatility. So walk us through how the ADTRO is shaping up across your segments like cash, derivatives, and commodity.
Indeed, derivatives has been an area of focus for us. We have been growing this business in a very responsible way. To grow this business, what we've been doing is we've invested in improving our technology backbone. That's an investment that has been going on for the last several quarters now, and increasing digital journeys and experiences for the customer. We've added some very, very interesting tools which enable relatively younger customers, and I would say even more mature customers, to participate in the derivative market in a risk-contained environment. So you know exactly what is the kind of position you're taking, what could be the downside implication of it before you actually take a position. And I think investors like that, and probably that's the reason why we've not just been able to show a 5-quarter sequential increase in derivative revenue, but actually during the last couple of quarters, we've gained market share as well. So I would attribute it to some of the steps that we have taken there. As far as retail participation is concerned, I think fair to say that we saw a secular trade, sort of a growth on a sequential basis through this whole, I would say, periods that I can, go trace it right back, probably from 15-16 onwards. As far as F&O is concerned, we've seen secular growth. Even through this COVID period, it went through a very high growth momentum. Even in the current quarter, on a sequential basis, the F&O volumes have actually increased on a 25% sequential basis. So the trend seemed to be pretty sort of holding as far as the F&O is concerned, and it is triggered by increasing participation by some of the more mature investors, as well as, I would say, some of the younger investors coming into the market.
Hi Vijay, season's greetings to you as well. Just talk to us about the momentum that we are seeing with respect to retail participation. How has been the SIP flow for you? What's been the trend with respect to Demat account opening? And do you think this kind of momentum can really sustain over the medium term?
Yeah, so I'll explain this story in the context of a slightly longer term horizon and then come to the immediate past few months. In the year before COVID, the number of newcomers coming into the industry were approximately 50 lakhs. So 50 lakh Demat accounts got opened pre-COVID. During the COVID year, which is 21, this number tripled. It went to about 1.5 crores. I'm talking with respect to the industry. And the second year of COVID, had actually more than doubled from after tripling, and it went to about 3.45 crores. In terms of a quarterly run rate, and now coming to the more nearer term trends, we saw a peaking of this trend in Q3 of last fiscal. In last fiscal Q3, we saw the newcomers coming to the market at about 1 crore, just in that one quarter. So contrasting it with 50 lakhs in the pre-COVID year to 1 crore in one quarter. After this quarter 3, we started seeing a slightly moderating trend. And this moderating trend has continued right into Q2. So this 1 crore in quarter 3 moved to about 90 lakhs, 91 lakhs in quarter 4 of last year. In quarter 1, it came down further to about 70 lakhs, and it is now 61 lakhs newcomers coming to the market. So indeed, we have been seeing a slight moderating trend as far as newcomers coming to the market. The other important number is the activity of these participants in the market. This quarter, I must say, for the first time, we have seen actually a sequential decline, I think after a long time, as far as the NSE active customer base is concerned for the industry. It was down by about approximately 7 lakh on a quarter-on-quarter sequential basis. So clearly, I think the market environment, which is sort of in some sense uncertain given the global developments, the geopolitics, uncertainty around it, has to some extent muted the participation of retail, particularly in the last quarter, quarter that just got over.
And can you highlight the retail participation trend and update us on the new demat account openings? We were just talking about how there has been an absolute gush and we have seen a lot of new SIP accounts. So what has the flow been like over the last few months? Has it sustained on a month-on-month basis?
Yeah, I think this is again a very important question and very central to our strategy. I would, urge all of the viewers, listeners, investors, analysts to view us not as a broking house, but actually as a wealth tech player. The reason why I'm saying this is that it's been a very conscious effort for us to, pivot the company into that direction. And that is reflected by the fact that you will see equity-related income, broking-related income as a percentage steadily coming down. It used to be well over 50% in even a few years back, couple of years back. It is now down to well below 50%. We just mentioned the number. And our endeavor is to keep doing that. We will keep increasing other sources of revenue and outside of equities. And that is because we clearly find that our customers have a longevity on our platform. And that gives us the ability to participate, with various life stage needs of these customers. So we have pivoted to savings, investments, and wealth management as one important segment of our opportunity, which we are pursuing. The distribution of protection and insurance products as a second segment of the opportunity that we are pursuing. And finally, the distribution of loans through our platform digitally, which is the third segment of opportunity that we are pursuing. And you will see increasing contribution coming from some of the areas which is outside of equity, which is already to some extent visible, and the levers are being pressed even harder.
Thank you, Vijay, for joining us. Appreciate your time today.